Good evening, ladies and gentlemen. Welcome to the Race and Lanes podcast. I'm your host, Rico Muhammad. Give me just a few seconds here. I'm attempting to try to get our Instagram feed up and running. And I think I got it squared away now. So, yes, welcome to the Race and Lanes podcast. I am your host, Rico Muhammad. We joined here shortly by my co-host, Mr. Chuck Snow. Tonight, ladies and gentlemen, we're going to just have a little bit of a fireside chat. If you guys want to get involved, all you have to do is jump into the chat. You can jump in and join us. We welcome all your conversations. We are live tonight. So if you're whatever platform you're watching us on, whether it be YouTube or Instagram, you should be able to just reach out to us via the chat feature on those platforms, and we should be able to see you. If you would do us a huge favor, please like, share, and subscribe. If you find anything that we talk about tonight useful or helpful at all, by all means, tell a friend to tell a friend about the show. It helps us out tremendously, and it doesn't cost you one penny for you to subscribe. So if you could do that for us, we would greatly appreciate it. And with that being said, and without any further ado, I'm going to welcome my co-host, Mr. Chuck Snow, to the show. Good evening, Chuck. How are you?
Oh, we're doing great, Rico. Thanks for asking. How are you doing, buddy?
We are maintaining, even though with the, like we were talking before the show, right now on the spot market, these rates are absolutely brutal out here in the trucking world right now. I'm not sure what many other people are experiencing. I saw a couple of different discussions on some different forums, and they were talking about the information that is being put out by some outlets, which we'll leave those nameless while for our conversation. But they were saying that some of these outlets that are saying that the numbers for operating people are operating getting rates in the 250 to 260 range is way off.
Yeah.
And I absolutely agree with that notion, because the rates that I'm seeing are nowhere near turning that type of money on a per mile basis.
Well, not unless you're, not unless you're going into a place like New York City, where you're going to get torn apart with tolls and congestion. Other than that, no, I don't think you're going to see 260 miles.
Yeah, so I think that, like we've been talking before, we really need to, and I know that we've been experiencing that a lot of people have been leaving in the industry. A lot of people have been going out of business. Authorities people are putting authorities on hold. A lot of equipment's being sold, but I think we need to see a little bit more to try to cull the herd, so to speak, so that we can try to get some type of a base and stabilize within the industry to get to be able to get things back profitable. Because right now it is really tough to turn a profit.
Well, part of the problem, I think, and I just interject myself for a second. We're supposed to be joined tonight by John Farquhar, who's a safety expert. He may be running late. He hasn't logged in yet to join us. So, ladies and gentlemen, Rico and I are just going to, as he said, a fireside chat and talk about what's going on in the industry. And one of the big problems I think that the industry has right now is a bunch of trucks end up being repossessed or sold or given back, voluntary surrender. They go back to the dealer, and all that's happening is they're getting recycled. They end up going right back into the same market they came out of. And that's not helping us. What we need is we need to figure out what the hell to do with these trucks, because there's so many of them that have been built and that have been kept. What do we do with them other than keep putting them back into the pool? That's where all the problems are starting.
Yeah, but I think, like I said, we had social media is a great thing. We had a lot of influencers, quote unquote influencers, And I believe that's all they were influencers or people that kind of heard a little bit about the trucking industry, and it came, during the pandemic, trucking became the in vogue, the in vogue thing to do, a source of creating and generating a second or third income stream, and and the barrier of entry was not fairly high for people to jump in, whether they were just buying the equipment and trying to put drivers in trucks, or whether or not they were taking the responsibility of buying, trying to get out of a company situation and buying their own truck and creating their own company as well. And look, I'm all for entrepreneurship, but I think we have a bunch of people that have jumped in, and I think that one of the main problems that we're still having right now to this day is that we still have a bunch of people that that are not really aware of what it takes to operate a business in this industry. I don't think that we have people that are intimately involved and understand their numbers or understand the numbers of staying profitable. I think we just have a lot of people that have, for lack of a better term, are just used to throwing stuff up against the wall and seeing what sticks. And that was at one point in time, especially during the pandemic, that was easy to do.
That was Rico. That time during the pandemic, I've been in this thing for 50 years now. And minus the 2.5 when I sold my business. So it's, I spent 47.5 years in this industry. And that period of time was so abnormal. The only time we ever saw anything like that was that one, and it wasn't even as good, was that brief period, which we all reminisce about, 2017 to 2018. That 6-month period where we really had the wind at our backs. Other than that, this has been a cut and grind business forever. And now, as our good friend and guest a couple of weeks ago alluded to, we're back to regular seasonality. Ladies and gentlemen, welcome to seasonality, because you're living it right this very second. Because historically, unless it was a boomer year, every year right after U.S. Thanksgiving, I would always say the big bird falls. And the only time we didn't have a bunch of red ink was those years that were just, the economy was hotter than a $3 pistol. And those years were a little bit different. But all the rest of the years, this thing just fell flat on its face right after about the 26th of November, and didn't pick up again until sometime towards the middle or end of February. Every year like clockwork. And this is what we're living right now. The only difference is, as I said to you earlier, is our costs are so much higher now than they've ever been.
Yeah. And so to kind of go back, I wanted to dig into the report that Dean sends us over every week. And one of the things that sticks out here on this report says that even though load posts on DAT's website, the volumes have decreased by 12% last week, but they are still 24% higher than they were at the same time last year, in the second last full shipping week of the year, compared to years prior. So even though the volume of trucks that are being posted is down, it's still double, 24% higher than it was last the same time last year. So
yeah, and we were hoping last year, people were hoping that they would see an end to this, to the freight drought, and it's nowhere in sight. Now, I hope that under the new administration we see it, but nothing happens very quickly, especially in Washington, D.C.
No, not at all. And so we're looking at still tough times ahead. I got on here maybe a couple of weeks ago, maybe a couple of weeks before we had Dean come on, and we was talking about, I think, right after the election, and we were started. It seemed like we might have been turning the corner, but man, that was really short-lived.
Yeah, you know what that was? That was a pump up, getting ready for Black Friday and getting ready for Thanksgiving.
Yeah, yeah, and it kind of made a lot of sense because Dean kind of explained that how, especially with by Trump winning the election, the people were trying to prepare and get ahead of the quote unquote tariffs. So people were already ordering extra. So during that time frame, which was when we were seeing a lot of extra freight that might have been moving, people trying to go ahead and stockpile to be prepared for the upcoming potential sanctions that were coming down the pike. And someone was posting, and even talking about that with the shipping containers. I seen some stuff on social media. The guy was saying it was a driver that was sitting at a port somewhere, and he was saying, "This is all we do is wait." And he was just showing how all of the drivers were sitting there. There might have been 10 or 15 drivers sitting in a row at the ports waiting on containers to come in, but that they still were not being offloaded yet, and they didn't have any work to do.
Yeah, because these guys live on the ships coming in, and that was another issue. There's a potential strike starting in January on the docks.
Right.
It appears. Andrew Stacey's got a question here. Markets are going to be reserved due to tariffs. Do you not think? Oh yeah. I think I think people will buy what they can, and then after that, who knows? We
Absolutely.
don't know about these tariffs. Like, I honestly, some of it, Trump is doing his thing, and he's using it as a bargaining tool to get everybody on side with everything he wants. Well, he wants Canada to control our immigration because some of our bad choices are flowing into the U.S.
Yeah, so we're not 100% sure exactly how far reaching the potential of these tariffs could be coming, and how much of an effect that it's really going to have on the industry, because for different trading partners, I guess, like someone was explaining to, I think it was Michael that was explaining to us, um, different people are going to be the tariffs are going to be different across the board.
Yeah, 100%. And this whole tariff thing, actually, I don't know if you're aware of it, Rico. It just tore our government apart yesterday.
Oh, really?
Yes, our finance minister was now she had to deliver a budget. She was fired on. She was asked to leave her post and not deliver the news of a bad, really bad financial news after delivered on Monday, and the idea was our prime minister thought as soon as she delivered it, he would fire her and make it look good, like he had nothing to do with his bad decisions. So it ended up where he quit publicly. He handed in a resignation as finance minister, and a whole bunch of other politicians are ticked at our prime minister, even his own party. And people are running scared, including him, because of these tariffs. So he's got everybody really well shaken up. He just keeps referring to Trudeau as the governor of our great 51st state of Canada. So he's having fun. He's playing with us like a cat plays with a mouse.
Hmm. So I want to jump back into the DAT report, and Dean says for dry vans, we'll talk briefly about each segment. It says
Right.
there was a noticeable surge in the volume of loads moving last week in dry vans, up 24% compared to the prior week and 18% year over year. The ongoing exodus of small carriers was evident as available capacity tightened, resulting in a 2 cents per mile increase in the national average dry van line haul rate, which shows that the national average line haul rate for dry vans at $1.74 per mile on the spot market. And this is saying that that's 9 cents per mile higher than last year and 6 cents per mile higher than 2022 for dry vans.
So yes, that makes sense because 2022 is when it really started, correct?
Right.
That's when all this, that was when the wheels fell off the bus. So yeah, it actually makes sense. But look how costs have gone up.
Right. And that's the thing about it that is the fly in the ointment, so to speak. You know, average cost at dealership labor rates are through the roof. The average cost, you know, diesel prices are still much higher. Insurance rates are going through the roof.
Yeah.
So it's kind of like almost it feels like you're dying a death of 1,000 cuts over here.
Well, we are. We're getting it from every corner because when you're a lot of guys are saying they're not getting the miles. Not only are they not getting the miles, they're not getting the money per mile. And then on top of it, their operating costs have gone through the roof.
Right.
And they're not getting, on the spot market, you don't get a fuel surcharge.
No, all that's baked in.
Yeah, and if you do get a fuel surcharge, what the brokers do is they'll take 12% off the rate, and then they add the 12% on as a fuel surcharge.
And what's been coming increasingly more and more difficult, we were talking like a little bit before the show as well, is how the brokers now don't even, it's more, I'm not going to say, but very few brokers are willing to negotiate now. And it seems as if everything now is, you can't even try to sell a value proposition when it comes to moving freight right now, because everything right now, it seems to be just price driven. It's not service is important, but it seems as if everything now is all about the bottom line. It's all about the price and not necessarily about the service, so to speak.
Well, I had dinner a couple of weeks ago with a couple of my ex-Trafix managers, and to hear the story, the customers, and this came right from the horse's mouth. The customers are telling them, they work out the rates with the customer, and basically the customer is saying, "This is what we will pay." That's number one. So it's not even the brokers making up the rate; the customers are getting their hands on data. And the data is so easy to get now. There's no hidden secret anymore.
But this is the thing. I hear what you're saying, but this is the thing that I don't know. Maybe I'm still stuck in my old school way of thinking. But the motor carrier is the one that should be setting the rate, so to speak.
They do,
and we have to understand. And I think that we don't have enough people that understand how to set the rate.
Well, yeah, you're 100%. That is 100% accurate. The problem is, here's how it works. The broker goes and he calls up 10 carriers and he says, "I've got this lane from Louisville to Atlanta. How much do you want?" And we'll call 10 carriers, and he'll get an idea of pricing. And the guy that gives him the best pricing gets the business, and that sets the rate. And he has to do that, because if he doesn't, if the broker doesn't do that, the customer goes with another broker. So all we're doing really is the carrier that sets the rate, and he puts it down to the bottom because he or she doesn't know what it costs to operate.
Right, and that's what I mean by when I said earlier, you got too many people out here just throwing crap up against the wall and hoping that it sticks, and hoping that it baffles the mind to some of the rates that I have heard and actually have seen people move freight for, and I'm like, I don't understand how you would even want to crank your truck up to move something for that cheap.
Yes, you know what? I'm hearing this all the time. I was talking to one of our friends, Bob Nuss from Nuss Motors in Minnesota today, and he was having his 80th birthday party, and he's telling me one of his friends, who's an owner operator, was supposed to come to Wisconsin or to Minnesota, and was offered a load from Atlanta to Minnesota for $1.07 a mile. And those are the rates out there right now.
That's absolutely insane.
But how did the broker get $1.07? Because somebody said, you know what, I'll do it for $1.07 or $1.08. The
Well,
broker making up the rates.
well, jumping over temperature control reefer market, the spot rates cooled last week, decreased by 4 cents per mile to a national average of $2.01 per mile. At the level, at that level, reefer line haul rates remained at 9 cents per mile higher than they were last year and 8 cents per mile lower than they were in 2022. Reefer line haul rates are 7 cents per mile lower than they were 3 months the 3 month trailing average. So we lost a little bit of ground on as far as the spot market rates when it comes to reefers.
Yeah, and cost to operate a reefer have not gone down last time I looked.
Absolutely not. They probably have increased dramatically.
Yeah. Reefers are very expensive. You're not just putting fuel in, you've got the maintenance and you've got the liability.
Right.
That's what I've seen so many people go broke in the reefer game because they didn't know what the heck they were doing. And a shipper put some hot product in their trailer without them knowing it.
Yeah, and that's another thing. I was at a facility last week, and they part of their rules was they were a shipper load driver account, and they asked you on the paperwork if you wanted to be present when they were loading your truck. Well, of course, I said yes. I want to be present, but like I say, with COVID and everything else that happened that took place, I didn't even get a notification. Nobody came out to offer me to come inside on the dock or anything. I just started feeling the truck shake when they started loading. I'm like, now how are you gonna try to hold me responsible for driver count when I was never given the opportunity to inspect the load?
Because he doesn't want you to inspect it. Number one, you're in the way. Number two, you might find something wrong.
Yeah, so we had a little bit of a come to Jesus meeting when we were when they got finished loading that load, so to speak. But these are the things, like you said, Chuck. These are the things that we got to be conscious of and aware of. And there's so much liability out here. It almost talking with a lot of people that are doing this on a day-to-day basis. It really has taken. You really got to have a passion to do this thing, because it's really not any fun right now at all.
It's not fun. It's everything's against us at this point in time. At least if you were doing really well and making a lot of money, you can put up with the BS. But when it's this tough in the market, it's really not fun. You're getting it from all in.
And I want to jump over really quickly and touch on the spot market rates for flatbeds. Says here last week, flatbeds line haul rates increased by 2 cents per mile to a national average of $1.99 per mile. Spot rates were 9 cents per mile higher than they were last year and remained 6 cents per mile lower than in 2022, and a penny per mile lower than the average 3 month trailing rate. So flatbeds seem to be still doing pretty decent as far as it goes when it comes to a spot market rate of $1.99 on average.
Yeah, but you know what? There's a lot of the one good thing about flatbeds. Usually, when you load, they're glad to, unlike van or reefer, they're glad to see you when you go up the deck to load up product, and they're always happy to unload you. You never get the abuse as a rule with a flatbed pull up to a site, well, you've got to wait till the next shift. You don't hear that.
Right. And then with all of this stuff that's going on, of course, this provides more fodder for people that are talking about the broker transparency ruling and things of that nature, wanting to have more transparency when it comes to rates with brokers. And I personally don't need to know or don't care what the broker makes as long as I'm being able to turn a profit. But I can see how some people feel with things that are the way that things are right now, currently in these current market conditions. I can see how people can feel that they're being conspired against. I can see that. I can see that argument. But it right now, it's just, unfortunately, it's just the nature of the beast when it comes to the supply and demand. We just have way too much supply out here that is not allowing demand to take hold to drive the rates in the direction in which we need it to go.
Well, and the only reason, as you said, the only reason it's like this is because we have an overcapacity, and we can't. Transparency is not going to help that. It doesn't really matter. And I've never believed in transparency. When I spent a lot of time running our fleet, I took a lot of work from a lot of other brokers, and I couldn't care what they got. None of my business. I couldn't care as long as I got what I needed. It's a load. If they offered me 4 skids and wanted to pay me $275 for it, I tell them no, I can't do it. And I don't care if they're getting 900, 9,000, or 300. Doesn't matter. I'm not doing it for that. Move on. If they gave me $500 for 4 skids going to Indianapolis, that was great. I didn't care if he got 10,000. Who cares? If he got $10,000, that means he can pay me that much quick.
Right. So I just gotta talk about. I wanted to go back to understanding rates, and I think that I think we put it out once before, and I think I'm going to try and see if I can't dig up the spreadsheet that I had and make it available for people. If you want to download it or take a look at it, I'm going to see if I can't find that spreadsheet that I used to use that helps you get a breakdown on how to calculate your cost per mile. Some people have you that is a critical component that we need to be, especially if you're an owner operator, you need to be intimately involved and understand what those numbers are. And I think that that's the only way that we're going to be able to turn the tide is by educating more people and letting people understand and know, help them understand what cost per mile really is. It's not just an arbitrary number. Understanding what those fixed costs are, understanding what those variable costs are.
Yes.
And understanding, you may not have exact numbers, but here we are right now. We're in December, so it's year end. So you should have a pretty good base as to what all you have spent this year on fuel, what all you've spent this year. If you have a truck payment, if you have a trailer payment, what your insurance cost is. Those things, those are fixed costs. The fuel, of course, fuel is a variable cost because you never, depending upon what areas you're running in or whatever, that's a variable cost. But the spreadsheet that I have has all of that stuff kind of broken down into different segments, and you can start to plug your numbers in there. And then also you should kind of have a good idea of how many miles you're running within the year. All of that goes into a formula to kind of help spit out exact numbers on where your operating cost is. And of course, you got your variable costs, you got your fixed costs, and then you have, profitability. I think that's something that you need to kind of calculate into your rate per, as far as your running numbers. You need to be able to calculate some amount of profitability into those numbers. And only you can determine what that is. But I mean, the market is going to help you kind of stay in line. You can't go crazy with that.
Well, yeah, that's going to keep you within the line. If you really want a quick, honest answer what it costs to run a truck, just phone up Penske, Ryder, or Pack Lease and ask them what it costs to rent or lease a tandem axle diesel sweep. And then you're going to have an idea. That's what it costs. And these guys are great operators. And they will do it a little bit cheaper than you because, number one, most of those guys don't change the oil as often as owner-operators. They're on an extended oil change program because they're using all synthetic lubricants. But that gives you an idea of what a truck costs to run. And you cannot do it any cheaper than they can. Trust me.
Yeah, but like I said, we're coming up on the year end, so you definitely need to be gathering all of your information and data
100%.
and getting that information together so that you can be able to, if you don't already have that information in front of you or you are aware of, you need to go ahead and start doing that and make sure that when you get ready to file your taxes that you if you don't have an accountant, but if you do have an accountant or if you're running QuickBooks, make sure that you're taking a look at your profit and loss statements, understanding what those profit and loss, understand what that numbers, you may have had a year this year, you may have had your maintenance costs might have been substantially higher. Is it time to maybe reconsider and think about maybe if you have older equipment, is it time to reconsider and say, well, this older equipment, I'm only getting 6 miles per gallon with it. If I upgrade and get something where I can maybe get around an 8 or 9 miles per gallon, does the ends justify the means to do something like that?
Well, yeah, and you know what, Rico? The numbers will not lie. They can't. 1 and 1 will always make 2, no matter what you do. You're right on the money there. And the other thing that I have to warn our listeners or remind them is you're accruing for maintenance. Because I don't care what you're running, your truck is going to need brakes, it's going to need tires, it's going to eventually need an engine job. What does that cost?
Right. Well, it looks like we might have to cut the show a little bit short tonight, Chuck. I got like a little incident that's taking place out here out front.
Oh, okay. I'm sorry to hear that.
Yeah, so I am actually live at a truck stop. But yeah, it looks like we got a little bit of, I may have to move.
Oh, okay. Well then.
So I apologize to everybody, but hopefully we want to try to maybe get a couple of shows recorded for later in the week as well, but we're going to work on that. But if you guys have any questions or any comments about anything that we talked about tonight, by all means, please drop them in the comments below. Chuck, you want to say anything before we get ready to make a move and get out of here?
Yeah, I'm away for a couple weeks. So as Rico said, we're going to try to do a couple shows. If we can't, I just want to wish all of our listeners a very Merry Christmas, a happy and healthy 2025, certainly a profitable 2025. If anybody needs to get hold of me, just send me an email, trucksnow280@outlook.com. Put your phone number on there, and I will get back to you as soon as I can. For that, Rico, I guess I'll let you move the truck into a better spot.
Right. Well, ladies and gentlemen, we want to thank you guys for taking some time out to hang with us. We definitely appreciate it. You could have been anywhere else in the world, but you took some time to hang out with us, and we're always eternally grateful for you doing so. For my co-host, Mr. Chuck Snow, this has been the Racing Lanes Podcast. Please do us a huge favor, like, share, and subscribe to the show. We want you guys to continue to stay safe out there, stay healthy. Happy holidays, happy New Year, but hopefully we'll see you before the calendar changes over. So we want to wish everyone God bless you and good night.
God bless. Catch on the flip-flop.
Keep it in between the mustard and the mayonnaise.